Joining us now is Eddie Ghabour, co-owner of Key Advisors Group with 28 million subscribers under 90 days. Eddie, this seems like a big threat to other competitors. Let's start by asking, what does it mean for Disney?
This is a huge number for Disney, and we know the future is streaming in this space. And one question I was asked when they first announced this was, as so many people getting into there, could Disney compete with Netflix? And this number that they came out with yesterday, I think proves that they can compete with Netflix. It's a very impressive number. And the thing is I believe they're just scratching the surface now. Because they haven't even really pushed this globally. I mean, they have a global footprint, they have the customer base, they have the brand recognition, and they have the content. And at the end of the day, when you put that all together, I think they're just going to continue to get more and more market share. I mean, I guess you can say Baby Yoda's taken the world by storm because it has certainly been a big win for them. And I think this is only going to continue to get stronger. So this whole earnings report, for me, the biggest thing that I saw was that big beat. I believe most people thought they would have 20 to 22 million. So they certainly surpassed those expectations in a big way.
Eddie, compare the challenge of ramp time to the challenge of retention. A year out from now, these figures are going to be even more scrutiny because Disney is going to have to show that it can retain users on a paid basis, even if they are to raise prices years out from now.
You're right, and that's obviously the challenge is right now when you take a look at their bundle package, it's a tremendous value to customers, which is attracting that as well too. As they increase prices, as you can expect them to do that, that is going to be a challenge for them, is finding that fine line of increasing prices and still pushing out enough content and good quality content to keep those subscribers continuing to pay. I think one thing that came out as well too is when folks are coming off of their free trial, they are renewing and paying. So that's a very promising thing for Disney. Again, at the end of the day, I think the streaming out there, like the Netflix of the world and the Disney, it's going to be about the content. You know, if they've got the quality content, people will stay loyal, and people will pay.
They've also got that family-friendly aspect, Eddie, which is something that we've been hearing even before this service launched, right? Which does have an element of loyalty built into it. But I want to ask about the coronavirus because Disney actually saying that its theme parks could lose $175 million due to the outbreak in China. What risk does this pose for Disney?
Look, I don't think there's any doubt short term, this coronavirus is definitely going to impact them in a negative way. Those theme parks are a big money maker for them, and it's really going to be a matter of seeing how long this coronavirus lasts and how long they have to keep those theme parks shut down. I don't think it only affects Disney, but anybody, the multinationals that get revenue from overseas and China are going to have some type of negative impact no matter how you look at it. The hope is that the coronavirus and quarantines don't last several months. If this goes 2 and 3 months, I mean, it's going to be pretty detrimental. But again, I think that's just going to be a short-term hit for these companies. It's an unfortunate black swan event that's happened. And I guess best case scenario, we can just hope that it'll be behind us in the next month or two.
We've also got news yesterday that Disney is expecting Hulu to roll out internationally in 2021. How big of a boat is this positively for Disney, and how much could this add to this investor sentiment that we've seen continue to grow for the House of Mouse?
I think why the sentiment is so positive for Disney is understanding that they have not really penetrated globally. You know, a lot of their revenue right now in the streaming has come domestically. And with their brand recognition, I think they can really penetrate globally. So my guess is, from a company perspective, is they're going to focus a lot overseas. And again, I think the future is extremely bright for them in this streaming arena.
Apple TV Plus, Eddie, that one has not been able to gather near the momentum that we've seen from Disney, but it does have at least some big projects, it sounds like, in the wings. What does it mean for Apple TV Plus?
You know, Apple TV Plus, again, you know, you can't ever discount Apple. They got plenty of money. They've got smart people to be able to invest. It is, in my opinion, going to be extremely difficult to really compete with Disney and Netflix in this arena. They have such a head start on the competition that, again, I think we're going to have to wait and see in regards to Apple TV, what type of content they're able to push out. But again, I don't see them as a threat to Disney here short term.
All right, so perhaps the biggest threat to Disney is itself in Bob Iger and his contract. Who do you expect to step in after his contract does expire in 2021, and what will that do to the investors, their own outlook on the company, and how do they factor in who that next leader might be and what they may prioritize as part of Disney's next strategy?
Well, look, in regards to who their next leader will be, obviously, I have no idea. However, we do know that leadership matters, and the market is going to look at this extremely closely. My guess is whoever they're going to bring to lead inside Disney next is going to be someone that has a background in this streaming space, because, again, I think that's where they can really capture and maximize the most growth moving forward. So if they don't pick the right leader, that will definitely be detrimental to their company. But you look at Apple, that was a big question when Apple was going to have a new leadership. How is that going to react in regards to stock and the future of the company? And obviously that transition has worked out beautifully. So again, Disney's a well-run company. These folks that are going to make these decisions on leadership, I would assume they're going to do a great job in regards to that, just as the Apples of the world have done, because we know leadership certainly does matter.
It is interesting, though. I agree, Eddie. I think leadership at Disney for this whole brand, right, really does matter to stay on brand, because everyone understands it just the same way that they understand Apple, right? It's a brand that people know immediately. But when it comes to Disney Plus, we don't anticipate that this is going to be profitable for a few years. So even though they might bring someone in who does have that streaming know-how, I mean, long term, is the market pricing in that this is going to be the bulk of the business for Disney, which also obviously has its hands in things like parks and theater business as well?
Look, I think the key to Disney, just like well-run companies, again, I continue to use Apple as a comparison, is staying diversified. Apple has gone very diversified in several spaces. They're no longer considered just an iPhone company. And so I don't think Disney's just going to solely focus on streaming, because to your point, they have that brand, they are family-oriented, and they're going to continue to stay balanced in that space. I mean, look at the box office hits and the amount of revenue that brings in. That's not going to go away. So again, I think the major growth in percentage-wise will be in streaming, but they're going to have to stay balanced and diversified from a company perspective, because I think long-term, that's better for the company, that's better for investors.
All right, Eddie Ghabour, co-owner of Key Advisors Group. Thanks for joining us, Eddie.
Thank you. Have a great day.